Microsoft stock is down over 30% year to date, lower than S&P 500 index, which lost 25% at the same time. There are a number of reasons that could cause that drop. One is a general financial climate and investors taking their money out of the market. And this year was especially bad for tech. The Nasdaq technology sector is down 44%. But there are also some more specific reasons concerning just Microsoft. One is an acquisition of Activision, and I made a whole video about this deal and Activision Blizzard, so if you want to see it, you can find the link in the description. And right now, Microsoft and Sony are fighting really hard over this deal, especially in the UK, where the CMA, a Competition and Markets Authority, published a report in which they state the CMA is concerned that having full control over this powerful catalog, especially in light of Microsoft's already strong position in gaming consoles, operating systems, and cloud infrastructure, could result in Microsoft harming customers by impairing Sony's, Microsoft's closest gaming rival, ability to compete. So this can be a deal breaker. But even if the deal would not go through, that should not be a really major blow to the company. So let's see how strong is Microsoft and what is its intrinsic value. But first, let's see who owns Microsoft. Insider ownership, that is an X. Individual insiders own just 0.04% of the company. But it is such a huge company that it is not a big surprise. The nice thing is that almost all board members and directors and senior officers have a number of shares of Microsoft. And if you have, like Satya Nadella, chairman and CEO of Microsoft, a 0.01% of this company, well, that is worth $174 million. So they have some skin in the game. Okay, and insider buying, that is an X. They are selling in the recent months. And what about super investors? That is a check. There are 27 super investors that have their money in Microsoft, and it is the fourth most owned stock by super investors. And are they buying right now? No, that is an X. They are mostly selling. In the second quarter, super investors bought less than 1 million shares and sold 3.3 million shares. So now let's take a look at the financial health of Microsoft. Return on invested capital. That is a check. It is 22%. And we are looking for a return over 10%. So this is really nice. It shows that the management does a good job in allocating the capital. And what about free cash flow growth? That is an X. It is 8.3%, so a bit below the 10% growth that we are looking for. Now, let's take a look at the net profit margin. That is a check. It is really nice, 36.7%, and their peers have profits margins at around 8.3%. So they have an incredible pricing power. And that alone shows their very strong financial moat. Okay, what about shares buyback? That is a check. They are buying back shares every year. And in the last 10 years, they bought back 11.9% of their shares. So this is another very strong point for this company. If we just stay invested, every year we get a bigger part of this company without having to buy any extra shares. Okay, and what about the debt? That is a check. they could pay their long-term debt in just over half a year with their current free cash flow. So, except the free cash flow growth, it all looks really nice. But now let's see, is there a cherry on top of this cake? Let's look at the dividends. Dividend yield, that is a check. It is 1.2% yield and we get $2.72 per every share. And what about a payout ratio? That is an X, but only very slightly. The payout ratio is 26.9%, and we are looking for dividends with a payout ratio of 30 to 50%. But it is better to get slightly smaller dividends than to go the other way, in which a company cannot sustain a certain level of dividends. So even though we could expect a slightly bigger dividend, it is a stable and sustainable one. And what about the dividend growth? That is a check. Microsoft dividend has a 5-year growth rate of 9.7%. And the dividend is growing every single year since 2005. So it all looks really nice, but if something is valuable, it usually is expensive. So let's value Microsoft with a discounted cash flow formula and compare it to the current price. To value this company, we have to estimate its growth for the next 10 years. And we will make 3 scenarios: low, medium, and a high one. In the low scenario, we can estimate an 8% growth for the first 5 years and then 7% growth. In the medium, 10% growth and then 8%, and in the high one, 15% for the first 5 years and then 12% for another 5 years. So now let's see what is the intrinsic value. In the low scenario, it is around $162, in the medium $182, and in the high one $255. But these are not the prices we should be buying this company for, because we always have to add a margin of safety. I use a 30% one, and it allows me to be a little bit wrong in my estimates. Even if the growth would be smaller, I could still make money on this investment, or at least not lose so much. So, with the margin of safety, the price in the low scenario should be around $113, in the medium scenario $127, and in the high one around $178. And the current price is $237. So only in the high scenario, without the margin of safety, it is a buy. In all other cases, it still looks too expensive. But of course, if you are buying a company that has a great history of growth and stability, then you usually have to pay extra. And you can say that my estimates are too conservative. For example, the intelligent cloud is a part of Microsoft that is growing in double digits in the last 5 years. It got to 25% growth in 2022. So why do I estimate only 15 and 12% in the high scenario? Well, we might be going into a recession, and we always should be conservative. In my mind, it is better to miss an opportunity than to get yourself in trouble by being too optimistic. But before you make any financial decisions, always do your own due diligence and decide, is this a right investment for you, and is it a right time to buy it? It certainly caught my attention as an investment idea, but just not at the current price. But if you have a different opinion, then please let me know in the comments. I really enjoy hearing your takes on the companies we analyze. So, That's it for today. Thanks for watching, and if you found this video interesting, then please like it and subscribe if you want to see more videos like this. See you in the next one, and bye bye.